Hey guys, welcome back to another edition of the Market Preview. My name is Vasily, I'm your trading coach and professional forex trader. For today's weekly edition, I prepared for you a very interesting discussion about key levels. Reading your comments, I noticed that the most common question that you ask is about key levels. And indeed, I think sometimes when you watch my videos, you realize that it is quite hard to identify the key levels that I show you. And you are struggling to get how do I identify them. And I must admit that it is a very hard technique and it requires the experience to correctly identify the key levels. But there is a very nice strategy, very nice approach that is very appropriate for newbie traders, and most of the time it will show you a very strong key levels. This method is based on the FIBs, and I know that you love FIBs, so let me show you this method. So don't forget to like this video, subscribe to my YouTube channel, and leave a lovely comment. So now let's start. Alright, so I want to start with you with the FIBs. Yes, so what we're gonna start here is the settings for the Fib levels. So I open the Fib retracement tool, and remember, here we will work just with the Fib retracement tool, not the Fib extension, just Fib retracement, yes. And we take that tool and we just randomly draw the levels. So here, if we open the settings, here are the levels, the Fib levels that will appear on our chart. And I want to focus your attention that here I have 382 level, 05 level, 618 and 786. In my view, these are the most important levels, and though these are the the default numbers, based on my backtesting, based on my experience, I realized that these are just the most efficient levels. So this is the levels that we will work with. Now the next step. The next step is that we must realize that we should know from which points we draw our Fib levels. Yes, we need to know from where we draw the Fib retracement, and it is a very tricky thing. Checking the ideas on TradingView and checking the analysis on different traders, I noticed that many traders do it just incorrectly. The point is that we should draw the Fib retracement levels strictly based on impulse lags, yes, from swing low to swing high and from swing high to swing low. And it is your task to identify these impulses, and it is very important skill. And if you want to master the price action, the swing trading or the Fib trading, you must know how to identify these impulses. So let's discuss that on the example on the pound dollar. So when we talk about the drawing the Fib retracement for major key levels, we should take only major impulses, the most important impulses, the impulses that represent current market trend. So look, on the pound dollar, I want to show you the first impulse. In my view, here we have our first bearish impulse. Yes, it is just a major bearish movement from that point right here all the way down to the downside. Why I assume that this all movement is the impulse? Because though we had the price fluctuations right here, this impulse represents the entire strong sell-off of pound after this bullish impulse to the upside, right? So we neglect here the minor price fluctuations and we just take this major leg. Then as the price reached the structure low right here, the price started to grow. And in my view, our current bullish impulse is the entire leg, yes, from that low to that high over here. Yes, this is our entire impulse. So here on a pound dollar, we identify two impulses, the most important movements on a daily time frame. Realize that we work here with the higher time frame analysis. We are looking for the most important legs of a move, and of course such legs are on a higher time frame. Yes, so we identify them on a daily. Now let's discuss how we will combine this impulse leg and our Fib levels. So to combine that, we will work just with the last impulse, yes, the last leg of a move. And our last leg of a move is this bullish rally. Yes, so this is our major bullish impulse. And if we draw the Fib retracement based on a bullish impulse, we start drawing our retracement from swing low to swing high. Yes, so I take my Fib retracement tool, yes, and from swing low to swing high, I draw our Fib levels, yes. So here we have our levels, the 382, the 50%, the 618, and 786. So where will be our key levels? First of all, realize that the most important key levels are the initial point and end point of the impulse. So here, based on one level, and based on 0 level, we will have our first two key levels. Why? Because from that point right here, from that point, a strong bullish trend has started. And of course, such bullish rally can be initiated only from a major key level. And same thing with the end point of the impulse. That point right here is of course a very strong resistance, because that bullish impulse has been violated once the market reached that level. So these are our strong resistance and our strong support. Now we are looking for the key levels between them. How do we look for them? As you can see, we have here 1, 2, 3, 4 Fib levels lying within our impulse. Our task is to find the levels that match with the price action. What do I mean by that? Look at this level, 382 right here. Look how it matches with the price action right here. Yes, definitely here you can see that the market multiple times respected that area around 382. So here will be our first key level within the impulse. Yes. Then look, we have here the 50%, and you can see that we didn't have any major price fluctuations from that level. Yes, we just don't see anything. So what we do right here, we take our 50% level and take it away. Yes, we don't need that. It is not relevant for our analysis. Then look at this 618 level. Again, look how many times the price has respected the area around 618. So again, here we have a key level. Yes, and then we look at the 786. No price fluctuations right here. The price just neglected that level and went higher. Yes, no respect for that level. So what do we do right here? We just take away the 786 level. So just by this simple Fib analysis, we have identified 4 major key levels. Yes, the key levels that were confirmed by the price action. Yes, and that are confirmed with the Fibs. Yes, and you can see that very important thing for you to grasp is that we treat not the exact 382 level as the key level, but we treat the area around them. Yes, so we just check the price action on the left and we unite all that price action in the area. Yes, and with that areas, if the market, for example, drops right now on the pound dollar, this will be a very, very, very strong point from where we will expect a bullish reaction. Yes, so let's now discuss some other examples so you could get how this method works. For the second example, I want to take dollar yen pair. And on dollar yen pair, again, we are looking for a major impulse, major price movement, right, on a daily time frame. And look, here we have very, 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 very nice impulse leg. Yes, this strong bullish impulse all the way up. And it was so sharp, so strong. So definitely for us, it is a major impulse leg. And based on that impulse leg, because this is a bullish impulse, we will draw the Fib retracement from that low to high. Yes, and now let's bring back all the key levels, all the Fib levels that we apply for our analysis. Yes, so again, Now let's look for a match between the key levels, or between the price action and between the fib levels that we have right here. So first of all, definitely right here, look, based on 382. Look how many times that area right here was respected. Look how many times the price bounced from that level. So definitely it is a key level for us, and here that area will be a strong structural resistance for us. Then look right here again. Yes, again, look how many times this 50% level was respected. Yes, by bulls, by bears. So again, we unite that all these price fluctuations in one structure area. And right here again, just this recent 618 level. Look how many times in the recent past, in the recent history, the market respected that level. Just crazy. And again, we so easily identify the key levels by this simple technique. And look at this 786. No price fluctuations right here, nothing. So what do we do here? We just remove 786. And the last key levels that we will take right here is the initial point of our impulse. It will be very strong structure support. And we will take this structural resistance right here. And by the way, don't forget that we have also structure on the left, so we will just unite that, and here we will have just a major, very important structural resistance. Look, very simple, right? Remember that it is not the most accurate technique, but while you are learning, I know how hard it is for you to look for these key levels, and I believe this technique will just help you a lot. Yes, and it lets you not be paralyzed by the key levels. I frequently check the charts of my students who just start coaching with me, and I asked them to send me the key levels that they identify, and most of the time it is a complete mess. Many levels. And it is just hard to read the chart, but with this method, it will be much easier for you to identify these levels. Now let's discuss one more example. And I guess just for the sake of the example, let's discuss the dollar cat. Again, just, here what is good, here we can easily see this impulse stack. Yes, it is very loud, I would say. You just open the chart and you immediately see that. Yes, so here goes our major bullish impulse. Yes, it started from that point right here, and here was the completion point of that impulse. So we again, because that it is a bullish impulse, we take the fib retracement tool. Yes, and we draw our fib levels. Yes, again, we bring back all the fib levels that we discussed, and now again we look for a match. Yes, and just look at this perfect match with the 786. Yes, just look at that. It is just, man, it is just crazy. Here, look, just it matches so nicely, and here our first key level. Then look at the 618 right here. Again, so nice. Yes, so nice match right here, and we again unite that in a key level. I think we will just adjust it here a little bit like that, so we consider also the price fluctuation right here. 382 here, not really. 382, 50%. Yeah, it looks like here the market not really respected them. At least this 382 here, yes, something like that. And here we just take away the 50%. Yes, and our last and major key levels, this major structure support right here and this major structural resistance. So again, we easily identify the key levels. Yes, I know here, for example, our approach missed that structure. Yes, with the fibs just neglected that level, though we clearly see that it is important. Yes, that is why I tell you that it is the beginner strategy, because definitely that strategy neglects some levels, but still it shows you very strong key levels. Yes, so try that. I want you to backtest that. I want you to try that. I truly believe that it will help you a lot in day trading. Yes, and as I told you, no matter what strategy you trade, if you want to become an expert in price action, definitely this impulse X identification skill is very important. If you want to be a swing trader, again, very important. If you want to master fibs, if you want to trade structure levels. Yes, this technique will help you everywhere. Yes, because of the FIBS application and the impulse lag identification. So try that. Yes, very, 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 very good technique in my view. Alright guys, so it looks like this video is relatively short, but I still think it is very, very informative. So try to apply this approach. Remember, the most important thing that you need to grasp from this lesson is that you must correctly identify the impulse lag. Yes, and if you learn how to correctly identify the impulse lag, you will easily identify the most strongest key levels that the market respects. Yes, so thank you for watching. Please like this video, please subscribe to my YouTube channel and leave a lovely comment, and please propose new topics for the next videos. Thank you so much and good luck.